Wall Street isn't just focused on Wednesday's Fed decision. The Treasury's refunding announcement taking center stage thanks to a recent run-up in yields. Traders broadly expecting a record $114 billion in refunding. The plan could see auction sizes increased for all but the longest debt, as the federal deficit is expected to climb above $2 trillion in fiscal 2025. Meanwhile, the Treasury reducing its estimate for federal borrowing this quarter, easing some deficit-related concerns. Joining us now, I'm so pleased to say, Bloomberg's Kailey Leinz. Kailey, I want to start just with where people are thinking the Treasury is going to come out tomorrow with this announcement in terms of just how much money needs to get borrowed through the Treasury market.
Well, as you said, Lisa, $114 billion for next week's sales of 3s, 10s, and 30s is what is anticipated. But tomorrow really is going to give us that finalized picture of what supply is going to be looking like, knowing that the Treasury has had to issue a lot more debt because the deficit is rising. Already in the year through September, $1.56 trillion of bills on net have been sold the year through September. So this really is what the bond market is bracing for. Now, of course, against the backdrop of yesterday's announcement from the Treasury that $776 billion is their new quarterly borrowing estimate for this period. That's down from about $852 billion. Primarily that cut driven by higher than expected revenue projections because of deferred receipts from states like California and others where they've had natural disasters and were granted extensions. But still, despite the reduction in that borrowing estimate, the new projection still marks a record amount for the calendar fourth quarter. And of course, as the bond market considers what the Treasury is going to do here, it's as we see 10-year yields just off of that 5% level we reached earlier this month, still hovering around the highest we've seen going back to 2007. And of course, what's interesting is Treasury Secretary Janet Yellen was here at the Bloomberg Bureau in Washington just last week, Lisa. She was asked about the moves we have seen in the bond market, and she thinks the higher yields are reflective not of the higher federal deficit, but instead of strong U.S. growth and rates that are going to have to stay higher for longer. But of course, not all market participants are agreed with her on that.
Kailey, just quickly here, I'm wondering how much this is what's hanging over the discussion about fiscal support behind some of the conflicts that the U.S. is getting more and more involved in, including Ukraine as well as Israel.
It very much is for the Republican Party, Lisa. A lot of conservatives would like to see more fiscal discipline exercised here in the U.S. And, of course, on the case of Israel funding, which the White House has requested about $14 billion from Congress, the House Republicans unveiled a bill just yesterday that would effectively offset that by cutting more than $14 billion in funding from the IRS. That's not something we usually see with emergency funding requests, but it speaks to the idea that that party would really like to see this deficit brought under more control.